Coming up next here on Morning Call, can they retire in style? Don't miss our portfolio makeover. We're renovating a viewer's portfolio with the help of a financial planner. That's next. This week we are renovating the portfolio of Seth from California. Here's what he's looking at. Seth is 54 years old, is out of work from the high-tech industry and considering full retirement now. He currently makes about $75,000 a year in rental income from property he owns. He has no dependents and monthly expenses, as you see there, of about $5,000. Seth has $50,000 saved in cash, a rental property worth $250,000, and about $1.7 million invested in the market. Seth plans on retiring fully. He has begun moving his investments into closed-end bond funds. Seth would like to know how best to protect his assets from economic disruption, such as that from another terrorist attack. So joining us now with some help is Kevin Ellman, certified financial planner with Lincoln Financial Advisors. Good morning, Kevin. Well, let's take a look at Seth's current portfolio. I mean, he looks to have some of this game figured out for the most part. He is a bit diversified, but he sounds more focused perhaps on asset preservation and less appetite for risk. So is the stock allocation a little too high, even though it's mostly in large caps right now?
Well, I think that's a good point. You know, right now he seems to have about 95% of his money in stocks, and I think that would be very high. His biggest concern is what would happen to his portfolio if there was a terrorist attack. And while that's possible, you know, my personal opinion is that the American capital market system is so strong that we might see a temporary disruption, not anything permanent. But if he wants to sleep better at night, he should probably consider being better diversified.
All right. Well, in terms of, you know, I see, I don't know if it's a problem or not, but if in fact he is retiring at only 54, do you see other moves that you'd recommend to live comfortably for what could be a long retirement?
Well, you're right. He could live, you know, quite a long time in retirement, so we can't just go to bonds. We do need to have a certain amount in stock. So I would recommend that he think about perhaps 30% of his money should be allocated into T-bills and perhaps about 10% into gold. These would be areas that typically, if there was a market decline, often there's a move to quality and a move to gold in an uncertain market time. I also think you should consider making some international investments.
In fact, let's show that portfolio change. There it is that you've been talking about here. And as we can see, I mean, with this pie chart, obviously much more diversification. But go ahead. Yeah, we see the gold. We see the 30% in the short-term treasuries, also some international exposure as well.
Right. That would be international stocks and international bonds. The theory here being that these markets move in different cycles, and they might not be as affected if the U.S. was attacked by a terrorist group. And additionally, I'd say that right now he's all large cap, and I think he should have some large, some mid, and some small cap stocks.
What about, I mean, I know it's early saying 54 and retiring, but I guess, you know, many people as they look toward retirement, they start to say, well, shouldn't I have a larger amount of my portfolio in cash? I know it's not going to earn that much, but at least I know it's there and it's safe. Or is he just simply too young and you think can handle some more risk?
Well, I think he should have a certain amount of cash. Right now he said he has about $50,000, and that's not a bad amount. What I don't know is he does have a real estate property, and it apparently throws off a fair amount of rent, so that might offset some of his expenses. So he could, depending on how his cash flow was from the real estate, up the cash portion maybe from 50 to 100 to 150.
All right. Kevin, thank you very much for your help. We appreciate the portfolio makeover. Kevin Ellman, certified financial planner.
For your free copy of Kevin's book, The 7 Biggest Money Mistakes People Make and How to Avoid Them, just text WEALTH to 88799.